The three B's of public speaking and writing are be brief, be bright.
Axios.
Be
Nick
gone.
Johnson did that at Axios. Okay. Microsoft.
Microsoft, we think, has this war chest of cash. Microsoft has proven through the years that they can monetize these new things that they take on. I think Microsoft, in particular, of all of the, you want to call it a hyperscaler or software company, has been unjustly beat up. And as you've seen, the spending's not going to go away. But in terms of on AI, by the way, but how they've been able to continue through a longer term perspective, manage these properties. That's why we own Microsoft. And we're going to continue. Microsoft was down in the second quarter, hurt our portfolios. We still had great performance in the second quarter. But at the end of the day, we're longer term investors, and we believe in the management there, and we believe what they're doing.
It just comes down to what I find challenging, I think, as you think about these software stocks and software as a service stocks is, yes, I can see a case where AI could disrupt a lot of their business. But I don't even know what AI is going to do. I can't figure that out. And so much less than to say Microsoft's going to be hurt or ServiceNow is going to be hurt or soft, But I guess the market's just saying we're selling now and we'll figure it out later.
Yeah, I just, like, the meta news is confounding to me. I know everyone was excited about it. Stock was up double digits, but now they're spending on cloud and now they're pivoting this way and now they're trying to chase this, building it versus spending on it. I just think that Microsoft's been much more consistent in its operations, and I want to stick with the consistent deliverers.
Jim Chanos with Bloomberg Money here 2 weeks ago nailed the meta thing. He calls it the Neo Cloud. Mm-hmm. We can't figure out what to do with AI, so we're going to compete with Amazon on the cloud. Nadella, in major shout out, Bradley Olson and Tina Lee at the Wall Street Journal with this definitive Nadella interview. I read his bio. Nadella's not normal. I think a huge body of the investment public doesn't understand his internal drive.
I don't think so. And remember, too, when he took over, that company was, after Steve, and no one likes Steve. And I remember I was at both at Piper and Merrill during those days, and we had huge presence in the Pacific Northwest. Pacific Northwest in particular owned a lot of Microsoft stock, and they did not like him. And so the private wealth perspective of that really started to, when he came in and brought more process and discipline and how they were monetizing these new properties and moving away from the subscription service into more of the deliverable software and all of that kind of stuff. That's where it really took off. So I'm a believer. We're there. Mm-hmm. I think of a stock that now it's becoming more of a value stock. You take a look at the balance sheet and the price to free cash flow on that company. It looks pristine. So we really like it. It's much more contrarian, Paul, I would say, than trying to pick the bottom and be a hero in Salesforce or Adobe. We just don't think that they're in the same league, and that's why we're sticking with it.
We had a small mid-cap portfolio manager come in this week and finally with a smile on her face, because her performance, the Russell 2000 is 2x that of the S&P 500 this year, which is, doesn't happen very often.
No.
How do you think about small mid-cap stocks?
No, we've been believers for a while, and we've been wrong, aside from the second quarter. And the way that we look at it is we look at the small mid-cap indices within the S&P 1500. And if you take a look at the mid-cap and the small cap, the SML dramatically outperformed the mid-cap by like 500 or 600 basis points. And the reason why the Russell 2000 outperformed the S&P 600 is because you have a lot more companies in the Russell 2000 that don't own money. So there was JoJo, the juicier companies. But if you take a look at the S&P 600 small cap SML, price to cash flow, balance sheet, earnings discernibility, better than large cap, and the growth rates for the second half of the year are better too. So I think in this world of the need for liquidity, and people love private equity, they love private markets, all these private equity, private market companies are smaller companies, so I think they're going to seek liquidity in small cap.
Brian Belski with us here before Jobs Day, 20 minutes away. Lisa Mateo to follow on here in a bit, but thrilled to have the gentleman from Humilis with us. I look at July 2-ish, and it tells me, and people know where I am on rebalancing, sell your winners. I'm like, really? Rebalancing this time around?
Violent, because think about what Micron did to a lot of the indices. Now, full disclosure, we don't own Micron.
Do you rebalance?
Yes, you do, because we did a lot in June, June 1, because of what happened in May. And so we had a couple positions that doubled in May, and then we rebalanced back. We don't own Micron, but it messed up some of the indices. For instance, if you take a look at the Russell 1000 value technology sector,
okay,
it was up over 100%. And come on, man. And Micron is a value stock. I didn't get that. But I mean, we underperformed the value index by 200 basis points. We were still up double digits. I mean, it's crazy. So yeah, you have to rebalance. We use drift in our portfolios, as you should, because you never try to outsmart the market. But
so
you
what's
need
drift?
Drift is you just let the positions kind of go over time. So say if my core position XYZ is 4% and it goes to 4.75%. I'm not going to rebalance back to 4.
So when you rebalance, you don't sell the whole position?
No. Because I think the biggest problem with institutional portfolio managers, and some of them took over our prior job, that own 200 stocks, guys, right? They have 200 stocks in these big fancy portfolios. When you run separately managed account portfolios, you're catering to Paul Sweeney, high net worth individual right here, and he's got taxable gains in all of these companies in these 50 stocks. If you blow out XYZ stock by owning it for 10 years, he's not going to be happy with you because you have a taxable gain. Well, if you're an institutional person and you blow out positions, you don't have that same thing. So on an SMA like we run, 40 to 50 stocks, period, we have low turnover, and you say if a position goes up to 6%, and you cut a half, you still own the position.
What you just heard there, folks, bronze it. We will have Belski on Bloomberg Money, because what you just heard was the clearest discussion of the madness of selling all of a winner with the memory of Benjamin Edwards III right there. Bronze it on selling the top positions up. Let's go. When they talk about high net worth, they never look at me. They look at you. I don't know what that's about. Paul Sweeney with Brian Belski.
What is your positioning in AI? How are you trying to play it right now? Is it still just own the chips or the picks and shovels, as people talk about? How do you think about it?
We've had the very honor of owning NVIDIA in various portfolios and various jobs since 2018 or so. So we're sticking with that. And we love the AMD. We love the Broadcom, Qualcomm for more value. But that's it. The key thing to investing is that you don't have to own everything. Right. You don't have to own everything. Have conviction and stick with it. But you know what I think people are missing is we're building out these data centers. So how do you build a data center, man? Well, people talk about Caterpillar.
Yep.
Well, we like this company called Acuity. We own it in our small mid cap. And they make the tiles that go on top of the buildings between the ceiling and the top of where the tiles are, because in between that are the wires. The wires heat up. So Acuity makes these tiles that are cool enough to keep the heat. I mean, it's really... But people aren't thinking like that, right?
Yep.
And so stuff like that, or old school power companies like Nextera, because you got to plug in the power, or Southern Company, and so that's I think the next derivative down. I think the biggest theme though that some play is cybersecurity, because I just don't think people understand it enough, and that's why we own Palo Alto by far. I think from our view. The best company in there. They've integrated in a couple of new acquisitions, one of them CyberArk the last year or so, that kind of took some time to get going, but they certainly got paid for owning CyberArk the last month or so.